So the last one on my list is a company across the pond, but the different pond. This one is on the Paris Exchange again, actually, unusually. This is a company called Biomerieux. It's a French stock. It's primarily a medical diagnostics company, which, as you can imagine, was quite handy to be during the pandemic. But the money it's made from COVID, it hasn't doubled down on things. It hasn't built an unnecessary amount of labs or whatever, thinking that COVID was going to stick around forever. It's actually been using that money quite wisely. So one of the things it's focusing on now outside of that is the next sort of leg of the company's journey. It's antimicrobial resistance, so things like MRSA and sort of antibiotic resistant things of that nature, essentially. So this company's got really, really tough comps, and the tougher because COVID testing, essentially, is going away. So, for them to still manage to grow when quite a large portion of their business was COVID-related, that has now gone. They managed to grow about 5% on their top line, and they added a little bit to their bottom line and top line guidance as well. And I thought that was quite impressive because, they used the COVID boom to sort of like sensibly grow the other aspects of its business. And I think this is a good trend. I think this is what I'd expect to see sort of carry on from them. So I think analysts are expecting less out of the bottom line this year. Its forward PE is quite a bit higher than its trailing PE. And the reasons for this are the standard reasons that you've been experiencing with almost every company this year. And it's essentially that they're going to see a lot of inflationary costs to the things that they need to do their business. And in the same way that I'm inclined to sort of forget about next year, with most of my stocks, to be honest, I'm inclined to forget about it with this one. So trailing P at the moment, I think this is an example of what this company can do in normal circumstances. Trailing P of about 16, growing pretty handily. Pays a 1% dividend as well, which I slipped in there just in case Paul came on the show. But I think it's a pretty interesting stock in a pretty interesting sector. If you want to be exposed to new drugs and you think sort of antibiotic resistance is a big movement, then a company like Biomerieux will give you some exposure to that sector, but in a way that you can understand it, if you see what I mean. Like, you're never going to know as a layman which drug is going to be, whether a phage is going to... I'm going to say whether a layman is going to go and explain whether a phage can disable a microbial resistance, which apparently it can, but you're never going to know who's going to crack that code first. But with Biomerieux, at least you get some exposure to that sector. So that's something I think is, that's a company that I think is pretty interesting. It looks pretty cheap at the moment, pays a nice little dividend just to tick you along, is on the lookout to buy back some stock, although I think they cancelled that program when they released their guidance because, there were pressures, pricing pressures, inflationary pressures, but looks like an interesting company to me.
I like what you said at the start for what it's worth. So they obviously had a nice boom during kind of COVID times, right? Because everywhere in that sector did, and justifiably so. But I do like it when companies don't. I mean, this doesn't speak well to Amazon for what it's worth. I do like it when companies don't suddenly start saying, well, look, this is how things are going to be forever and always, and this is the beginning of the new age of whatever it is, because it oftentimes isn't. It's often there are kind of shifts that are more durable, stuff like working from home and so on. But it seems to me unusual that it seems really easy, I suppose, for companies to kind of go mad and off their head with spending because they think, look, this is how it's going to be forever, and so on. And actually, perfectly sensible companies do this too, right? I mean, we saw Target, perfectly sensible, well-run retailer, getting their inventory all out of whack because, well, people suddenly stopped buying flat-screen TVs and lawn furniture and so on, and Target found themselves left with a load of it. And that's not to be critical of them particularly. They've got to try and do stuff. But I liked the fact that this is a company that's kind of fairly circumspect and cautious with its outlays, I suppose.
Yeah, and I think that's the thing that I like probably the most about them is that they've been really, really smart with the capital allocation. They've kind of realised that COVID isn't going to be around here forever, and they've started to, and they have been using that money that they've generated to go out and buy companies and buy things and buy new testing centres for different things. So the two most recent purchases with this antimicrobial resistance company that they've bought, I think they're called Specific, and they've also bought another company as well which does a sepsis testing kit, and then they've been pushing through some other diagnostic tests that they do, which is for and it's got, I can't remember what it was for, but it's got the FDA the fast tracking program on it as well. So they are really quite smartly spending the money they have previously generated to generate future income, which I guess is all we can ever ask for of a company. It's an interesting one. It's on my watch list. I just haven't quite been able to pull the trigger on it yet, but it's one of those where I just don't feel like I'm a million miles away.
Yeah, I mean, that speaks to how I think companies ought to work and how you think they ought to work. Get money, work out intelligent things to do with that money. It might be acquiring more businesses. It might be investing in the businesses you already have. It might be dividending it out to shareholders if you can't think of a way to do either of those previous things. Or it might be buying back your stock if you think it's underpriced and you will benefit shareholders by doing that. Not everyone feels that way, of course. There are people who think that you should just dividend out all of your money immediately, directly you get it. But speaking of how I kind of think of businesses and owning them, I like the sound of that sort of thing.